morning, good afternoon, and welcome back. Zoya, podcast producer here. This week we have Robin Merttens on the podcast with Munich Re in all things parametric. Joining him is René Mück, Global Head of Parametric NatCat, and Marcel-Steffen Reif, Global Head of Weather and Agriculture Risk at Munich Re. We touch on how Munich Re's parametric NatCat solutions are helping clients around the world, the importance of education and collaboration, and the future potential of parametric. Well, if you enjoy this podcast and are curious to find out more about either parametric or just anything NatCat, Instech is a community for the curious. We host a multitude of insights, events, and podcasts on all these topics and more. To join, you can see how to become a member and a part of an ever-growing global community in insurance at www.instech.co. That's pretty much it. Now let's see what Robin, René, and Marcel had to say.
Welcome to this week's Instech podcast. This week's podcast is going to be all about parametric insurance and particularly about weather-related parametric. Now, if you want to know what's going on in that space, there's no better organisation to talk to than go to Munich Re, who are one of the biggest and most experienced providers of capacity. And then if you wanted to talk to the right people at Munich Re, you go right to the top of the organisation and you talk to the heads of the respective departments. And I've got with me today René Mück, who's the Global Head of Parametric NatCat at Munich Re, Marcel-Steffen Reif, who's the Global Head of Weather Agricultural Risks at Munich Re. Marcel, René, welcome.
Welcome, Robin.
Now, look, in a big organisation like Munich Re, the first thing I have to do is work out where you all fit in this enormous structure. So I know that you both work for Capital Partners unit. What's Capital Partners do at Munich Re?
Following an experience of 8 years, so Capital Partners was founded 8 years ago, we just restructured the whole division into more solution-oriented setup. And we continue to take responsibility for global, external and internal retrocession, where also we have the cat bond team, because we are also placing our own cat bond. Then we have structured reinsurance solutions. Then we have Marcel's team with the weather solutions and a new team, which is Parametric NatCat. New, because of the purpose so far, was parametric was like distributed in the company, in various business units. And now we are concentrating it into one team with one focus and one clear strategy. And we have the underwriting mandate, the result responsibility.
So let's talk about those products. You lead the team. What sort of protections do you provide? And maybe an example or a client so that we can bring this to life.
As the name says, Parametric NatCat, it's all about natural catastrophes, and it's mostly around things like tropical cyclones, earthquakes, and floods. But wherever we can assess the risk, we can price it. This requests, of course, data. If you have a good database, we can structure solutions almost for all natural catastrophes.
What's the client base comprised of for those products?
So the client base is corporates and is public sector entities. So we don't aim for insurance companies. And I was always very surprised looking at our client base because it's very diverse. So it could be a hotel, like being afraid of that the beach gets washed away from a hurricane. Or you might have a logistics company, they have a supply chain interruption. You have manufacturers also the same, that they have additional costs, or they have the supply chain disruptions, but even also banks securing their mortgage portfolio. All this company actually have in common that they're filling any kind of protection gap where they don't get traditional capacity or insurance, or it's too expensive. So when you think of any kind of business interruption, which is not related necessarily to a physical loss, this is where we come in with parametric.
Marcel, your turn. You run the Weather and NatCat team there. What is it you provide under that banner?
Yeah, we are basically our group, we are complementing what René's team is offering on the parametric NatCat side. What we do is we offer parametric insurance, but also actually parametric-based derivatives, corporate clients in various industries around the globe. And what we try to do is a lot of those industries, they have like a weather risk within their business model, right? Where adverse weather events are driving economic or financial outcomes. And our products help them to manage that weather volatility. And when you look at the client base, energy is by far largest client base. It's like the clients that buy it the most, but then you have also, we see head or tailwinds when it comes to agriculture industries.
I've heard you call it revenue smoothing. before as a product. I quite like that. Tell me what you mean by that.
If you take, for example, a wind farm operator, right? You are producing energy, your business plan is actually building on that you can sell off that energy to the grid. But now if you have the wind not blowing, not for a day, that doesn't matter. 2 days don't matter. But if the wind is not blowing for, let's say, a couple of weeks, or it's actually a low wind year as such, then your revenues are actually massively affected. And that's what I mean with revenue smoothing. It's really helping clients to smoothen that risk.
Now, you've both mentioned by type of the clients you have, but neither of you mentioned brokers. Do you deal occasionally with brokers? Are you dealing directly with the end customers most of the time?
We are sourcing via brokers because we are a small team. We are just 15 people around the globe. And the idea is we are providing capacity. We are the underwriting unit, but the sourcing and the distribution has to come via the brokers. That's clearly our strategy.
When it comes to the weather space, I think one has to differentiate. If you go into, let's say, energy, I guess that's where that whole market has developed over a quarter century ago. And usually, especially in the very mature economies, they have a good understanding of the weather risk they carry. They have also own teams that build up their own opinion of how much of that risk they want to retain on the balance sheet, how much they want to lay off. So with those clients, we actually deal directly, right? There's not much intermediation involved. However, if we go into industries where we see like an emerging demand for our products, be it like agriculture, but also construction or transportation, for sure, I would say it's a mix. There's brokers involved, but also a direct contact. It's usually very complex products. You don't wake up in the morning and say, look, I want to buy like a parametric weather insurance. So I think there's a lot of iterations, and that's why I think sometimes the direct contact actually helps.
Yeah, I get that. René, let's go back to NatCat, parametric NatCat. Is that mostly hurricane and earthquake? Is that where there's the most demand at the moment?
Yeah, I have to say parametric NatCat still follows the most demand. It's usually like earthquake in the US, mostly in California, or you have hurricane exposure in the Caribbean. This is actually where most demand still comes from, of course, somehow limiting our opportunities to diversify the book, to balance the book. So therefore, we are very keen on growing outside of these peak scenarios, I call them. This is like our focus and our goal, but we see slowly also other perils coming to us.
Now, you'd make yourself very popular if you could cover severe convective storm. Is that on your list of things you cover?
That's a pretty broad scope, I would say, severe convective storms. I'm thinking then about flooding, hail, tornadoes, and similar stuff. And also, you have to keep in mind it's very much driven by climate change. So it's a risk of change there. We are developing products for that demand. First of all, we actually like flood. So that is a peril which we like to entertain. When it comes to flood, you have to keep in mind, of course, it's very localized peril because wherever your premises, your house stands, your house might be flooded, next one is not flooded. Therefore, besides like settling on precipitation measurements, we do that on sensors which are measuring the inundation height. So this is also an incoming stream of deals besides what we see from broker side.
Where's demand coming from for you in the world in which we now live and increasing awareness of parametric products? I imagine surging demand, but where are you seeing most interest in your products?
The world is transitioning to green energy. And if you look at green energy, that's like wind power, solar power, hydropower. The inflow to produce that energy is actually weather. So actually we see quite some demand when it comes to too low wind, too low water. Sun not so much because that's not so much fluctuating. Also on the agriculture side, there's more and more droughts. So there's an increased awareness on the corporate side on actually protecting, where maybe for the small to mid-sized farming, you have usually governmental schemes that support. But then if you go into the corporate world, they don't benefit from those schemes. And there's, again, more awareness. And then thirdly, I would say we see also demand from industries we would not have on our radar a couple of years ago. So be it like construction. So you have large construction projects, weather-related delays, there's high penalties. So that can be easily millions of euros or pounds of penalties where we see protections or protection requests.
Now I've got a genuine expert. I've been dying to ask this question because it's the very nature of what you provide that you are ensuring those industries against some weather-related losses. So, and you can't escape from the fact that you've got to be something of a weather forecaster in doing all that. You are making some assessment of what you think the weather is going to do in the next 2 or 3 months. Have you got a great team of meteorologists or something who stand behind you? How does that work in practice at Munich Re?
For sure, we have great team, and it's a mix of skill sets. It's meteorologists, it's financial modelers, statisticians, but also not forgetting like the legal side of things and those people who actually serve our clients who have deep industry expertise. But I wouldn't say we don't have the edge on, let's say, forecasting the weather the next 2 or 3 months. But I think we have the expertise that we feel comfortable actually assessing past data, taking a view on trends, on how we view climate is shifting, like future weather, and then taking those risks on Munich Re's balance sheet.
René, I've got a question for you. We can't talk to somebody, an organisation your size, without talking about recent hurricanes, Helene and Milton. Have you been inundated with claims? What I really like to think is, because it's all parametric, the payments have all happened a long time ago and they were automatic and you can get on with the next deal. What does your world look like in a post-extreme NatCat event?
First of all, of course, it's event having these hurricanes going through the Caribbean. But at the other hand, before the season, we expected much more of these kind of events. And actually, when you're referring to our book, this is exactly what we are there for. We are protecting against this kind of tropical cyclones. I have to say, we have a couple of deals where we have portfolios insured. These are indeed affected, where we also paying. We already actually paid out. Then we have also a couple of single risks locations. You can imagine that's quite dispersed in the Caribbean. Specifically for Milton, we had a near miss, and that was an actually interesting experience. There was also at the location that the site which was insured was not really hurricane wind speed. So the structure worked well. Unfortunately, didn't pay for the client. But in other cases, Helene, and in other cases for Milton, we had definitely payouts, and they are done already.
I've heard quite a lot of stories the last few months along those lines of somebody who takes out a product and has a very near miss. And it literally misses by a kilometre, and there's a certain amount of damage. But it's in the nature of the product, right? That you have a defined coverage and a defined trigger, and either it's in or it's out. Is that fair analysis?
Yeah, I have to say this is nothing we are happy about, specifically when there is a loss. We are very happy to get feedback on those and having conversations directly then with the client in order to improve the product for the next season. It's in no way we have interest not covering actually when there is any kind of losses. That's be our intention. We want to promote that product because we think it's really having a really good purpose in the sense to be transparent. So also the client knows actually what he's buying.
Look, there's increasingly demand for these products. We've always been fans of parametric. We write about it whenever we can. But I know from talking to everybody in the parametric space that there are frustrations that you feel you could do more. Do you feel parametric still underappreciated, or is it starting to get the attention it deserves?
I have to say, just recently, and maybe this podcast does its work on that, there's more and more talks in the media, in the press, and we see more teams to be coming to the market like our team, so on the risk taker side, but also brokers have founded team. Therefore, I would say the noise is very high, but still, I think what we all have in common, we have to educate the client and make clear what he's buying. I'm also saying, as I said before, it's very straightforward. So when you have the data available, you can actually calculate yourself what you expect on the payout. You mentioned the near misses. That's definitely something where we have to catch up. And we really, as an industry, we think about like how we can improve the product that we can overcome these kind of concerns.
The other thing that I hear regularly, and I don't want this to turn into some diplomatic incident, these things are incredibly complicated, and you alluded to that earlier. Is the reality that someone like Munich Re with the skill sets you put together has to do all the work? I'm thinking I'd like a protection against this, and there's an enormous amount of work that somebody then has to do on the structuring side, the pricing side. Those skills seem to be still very tightly held, and some people like Munich Re are providing a disproportionate amount of that skill set. Is that fair?
I'm not sure if you provide like a disproportion, but definitely I think there's an element of consulting, especially if you tap a new client base or if enter new markets, right? Where we know there are actually clients where we know they actually have the risk. And those clients, most of them are just used to carry on that risk for probably decades just in their own operations, in their business models. You read very often in annual reports, we had like an earnings dip because the weather, whatever, it was a rainy summer. So again, just then having a discussion to actually understand their weather risk, to see what do they want to have covered, what's the best data that would reflect the risk. As René just alluded to, also do some back testing in structuring to actually see that structure actually would have triggered past incidents, kind of like that's what I would call like a really robust deal. Yes, look, there goes a lot of work into it, but it's not only us. I think it's actually everyone who is in that market, and we see is actually providing that. And what we see is, while getting a client to do the first deal, it can take up 2 to 3 years. It's actually a quite sticky product. So if a client bought once, we usually see them becoming a recurring customer. So I would say it's like worth the investment from my point of view. If we wouldn't do it as an industry, I think that market would just be there where it is.
René, maybe you can answer this one too. Are there areas where you have the skill set to offer protection where you're not seeing any demand? Are there areas where you think the underappreciation of parametric is considerable and you could make the world a better place if there was more demand for this sort of product?
I think there's probably more places where we think we could do transactions than there are places where we do transactions. But I think it's also then it's our job and our job as an industry, also together with the brokers, to educate, talk to those clients. Again, I mentioned agriculture. That's an area I think that market in theory should be much bigger on the parametric side than it currently is. Also, if I look in what we do on the energy side in Europe and the US, and then look into Latin America, some of the mature Asian markets where you have companies that carry the same risk, but there's actually not a big market. So I think there's much more to do for us as a company, as an industry, which actually I find an exciting task, right? Because I think there's more stones we haven't turned around than we have.
Maybe just to add to Marcel, first of all, of course, we are a company, we have to earn money, and otherwise we couldn't provide the protection. And we are usually following the demand. But where I see definitely a sector where we can, as a company, I would like to see more is in the area of public sector business, where we have in the sense of microinsurance, or in less developed economies where we already have some schemes helping the society be more resilient. There are some examples, but not too many. There could be far more. And this is something definitely where we as a company, and Marcel's team and our team, like we can really help societies becoming more resilient or economies becoming more resilient.
It occurs to me when I hear that, and you both mentioned it earlier on, that this is still about education, both within traditional markets to see parametric as an add-on to what they provide, but also in these whole new areas. What's the reality? It's very well to say we need to educate people better, we need to create some more awareness. How do we collectively, other than this podcast, of course, how do we collectively do that?
That's a difficult one, because that's actually something we work on constantly. So we are holding conferences where we have deep discussions with our business partners. So we just had an event last week in New York where we were sitting in a room with 70, 80 people, and we are deeply discussing exactly a point you asked before. How can we overcome concerns? Some people called it like the negative basis risk. Something is happening. I have a loss, so the buyer has a loss, but the structure doesn't pay. You mentioned that before. That's a big concern. And I think that's the way where I think we make really progress is we are looking for multipliers, people who start to understand and then educate further, that you have really the opportunity to spread the word much further than maybe through this podcast. I think that's the way forward for us.
Just to add on, René, what I think is also important for our business is really a close dialogue with kind of like corporate clients in the industry where we have the hypothesis that they might be a good client for our products, and actually engage in a dialogue with risk managers or the treasury departments to understand, is it actually an issue? Is it just like something we as a reinsurer who will kind of have like day in, day out think about those risks, think that's a risk for them, or is it really a risk? And if it's really a risk, yes, then it's this educational process. And I think the strongest is actually if you have a client in the market or new industry buying the first time who also is willing to do like a testimonial, just say, look, we did that, right? Which again is very hard to do, but it's not only us who try to sell those products, but actually someone, look, I bought that, makes sense. It's part of our kind of like standard risk management toolkit.
Okay, we're coming to the end. We always ask our guests the same question. Marcel, I hope there'll be thousands of people listen to this. What would be the one thing you would like them to take away from having heard the chat?
Wow, that's a good question. I would say I hope it came across that both René and I are very excited about the market, the potential of that market, and where we think that market could go. And I hope if competitors out there, brokers, intermediaries, data providers, service organizations, just could, join that excitement and help us together develop that market, that would be great. And if that podcast is a little drop in that ocean, it would be great.
René, what's your final thought?
Yeah, more or less, I can only echo what Marcel just said. Parametric, I think, is an option, which is a toolbox which can help you filling protection gaps. I believe that sensor technology is a pretty cool thing where we can really booster and enclose also maybe this basis risk, which is always a topic. And then the thing is just bringing the word out to the client, explaining what we have available. We as a market, we as an industry, and then we are happy to support here together with our colleagues here in Capital Partners.
Well, if it hasn't come across yet, you need to know that I share your excitement for the possibility, the potential of these products. And we've been preaching this message for many years. And if just a few people listen to this podcast and also get infected by the same enthusiasm, that would be absolutely marvellous. You two, it's been an absolute pleasure talking to you. I know you're incredibly busy, and I've really appreciated getting hold of you, both in the organisation and the podcast itself. So thank you both, and I hope we'll keep in touch.
Thank you, Robin.
Thanks, Robin, for having us.
Well, if you've made it this far, then I'm pretty sure you found this as interesting as I did. Before we end, I'd like to add that you can join Instech at the Data Jam on November 28th, hosted by the Insurance Network, organisers of the TinTech series of conferences. This one-day event explores the implications and opportunities of data, analytics, AI, and automation for all sectors and business lines within UK insurance. Google Data Jam to find the agenda. See you soon!